Bitcoin's going higher, gold's going higher, stocks are going higher, because ultimately we are going to get asset inflation. See, one of the weird things is people want us to have a black and white world. So if I tell you, hey, deflation is likely to happen, right? Or it's the bigger risk, then people say, okay, well, if there's deflation, then asset prices actually usually go down. Okay. But then if I tell you, but the government is going to be incentivized to print more money, and that money is going to find its way into assets, because now people are convinced I shouldn't hold this cash. I'm not predicting this necessarily, but I think that there are higher odds that we could get asset inflation while consumer inflation does not get out of control.
For years, Bitcoin has been closely correlated with tech stocks. When tech rallied, Bitcoin rallied. When tech crashed, Bitcoin followed. But now, that correlation appears to be breaking. According to Pompliano, Bitcoin is transcending its previous identity. Why? Because Bitcoin isn't just one thing, it's multiple things at once. A digital asset in an increasingly digital world, a decentralized network not controlled by any single entity, a non-sovereign store of value, independent of governments, a neutral financial system, accessible globally. In times of conflict, these properties become incredibly valuable. Think about it. Moving oil during a war can be difficult due to blockades. Transporting gold is slow, expensive, and physically risky. Traditional banking systems can be restricted or monitored. But Bitcoin, it moves instantly, globally, and without permission. That changes the equation.
There's a couple things, like celebrating when you're down is really not, the smartest thing to do. But I do think that there's a sign of relief here. People are excited because, hey, we're starting to see that maybe we did bottom at $60,000. Now, famous last words, let's knock on wood. But what I would say is two things. One, Bitcoin has definitely been the shining light among a sea of red during the Iran war. And so there's kind of this weird dynamic where if you said to someone before we went into Iran and started bombing them, okay, what's going to happen to stocks? People would say they probably would rally, because you would think that all of these asset prices are going to go up because there's going to be inflation to fund the war. You're going to debase the dollar. And because of all of that, you're going to see, especially defense stocks, energy, etc. The second thing is you would expect oil to go up. The third thing is that you would expect bonds in terms of yields and all that. And then the fourth is Bitcoin would go down, kind of a risk type asset. Well, guess what happened? Exactly the opposite of all of that. Stocks and bonds went down, gold went down, oil went up, which you would have expected, and Bitcoin went up, which you would not have expected. And so when I look at that, it says to me that one, you can't look at history always as a guide for what's going to happen in the future. But two is that Bitcoin has transcended. It has officially broken its correlation to all of the tech stocks, etc. Now, can it hold that broken correlation? Remains to be seen. But I say it has transcended because Bitcoin basically has a couple of different ways to look at it. It is a digital asset. There's some people who like the fact that it's digital and not analog or electronic. It is decentralized. Some people like the fact that it's not controlled by anyone. It is non-sovereign. Some people like the fact that it's outside of their government. No other government controls it. And it is neutral. And I think that's what we're seeing now is people are saying, wait a second, a neutral, non-sovereign, digital, decentralized asset has value in the world. And a big part of this is, yeah, sure, Iran allegedly wants to get paid in Bitcoin, blah, 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 whatever. Forget all that for a second. If you need right now to move money around the world during conflict, well, you can't even move a barrel of oil around the world in some places because there's a blockade. Gold is pretty heavy. Now you start to say to yourself, wait a second, what if I need a digital store of value? Bitcoin becomes interesting. Now, what I do think is interesting is that Bitcoin is still sold off. So we can claim victory since February 28th to now and be like, oh, look how great we are. Okay, that's fine. Bitcoin's still down. It was $126,000, it's down to $75,000. I'm not a mathematician, but that's about $50,000 of loss from the all-time high. And so from that perspective, you say, okay, well, why is it that Bitcoin is still down 11% year to date or down, $50,000 from its all-time high? Bitcoin's going higher, gold's going higher, stocks are going higher, because ultimately we are going to get asset inflation. See, one of the weird things is people want us to have a black and white world. So if I tell you, hey, deflation is likely to happen, right? Or it's the bigger risk, then people say, okay, well, if there's deflation, then asset prices actually usually go down. Okay. But then if I tell you, but the government is going to be incentivized to print more money, and that money is going to find its way into assets, because now people are convinced I shouldn't hold this cash. I'm not predicting this necessarily, but I think that there are higher odds that we could get asset inflation while consumer inflation does not get out of control. The number one thing you can do inside of a company to have job security right now is become the AI guy or the AI girl. If you understand AI, if you understand how to implement it, you are not going to lose your job. These companies are going to ask you, can you do this? You do it. They're going to say, okay, that's great. Here's more responsibility. Here's more responsibility. And it is there's a difference between elevators and stairs. People usually say that you take the stairs up and the elevator down. Not if you know AI in a corporation, you take the elevator up, baby, right? Because as soon as you become known as the AI guy or the AI girl, you up. And I think that that's going to be a huge thing, and you got to show results, right? But that's big. And look, this all comes back to Bitcoin as well, right? I think a lot of folks are saying to themselves, okay, well, Bitcoin has this really weird relationship, very sensitive relationship to global liquidity, right? Like the U.S. government's national debt, it continues to skyrocket. Bitcoin is going to recover. On top of that, in a world of abundance, scarcity becomes very valuable. And so what is more scarce than Bitcoin? Not a lot. And especially when you have Morgan Stanley, BlackRock, Fidelity, all these guys coming in with the ETFs, you have Michael Saylor and Strategy buying up as much Bitcoin as they possibly can. Like Bitcoin is going to do very well over the next decade. I think a lot of people have been convinced otherwise. And in a weird way, those who stay focused and understand the power of Bitcoin and the value of Bitcoin, I think will be rewarded over a long period of time.
Morgan Stanley, good point. They just launched their ETF, most successful launch for them ever in the ETF space. How do you think about a lot of these players? Are they're looking to make transaction fees, looking to make custody fees, et cetera, or is there something else that they're thinking about, like more long term?
There's a war going on Wall Street, and they all competing over who can get more assets into their ETF. And I love it. This is why America is great, right? Is if you look at what has happened is BlackRock came out, they broke the seal. They had a banger of a fund, right? I mean, most successful product launch in the history of Wall Street. Kudos to Robbie, Larry Fink, all those guys over at BlackRock, right? They don't get nearly enough credit for what they did. Fidelity, right there alongside them. Then you get the Bitwises, you get the Van Eck, you get the 21 Shares, the ARK Invest, right? And we just rattle off fund after fund after fund after fund. Okay, Morgan Stanley wasn't playing. Now, I got a story for you. I went and saw Morgan Stanley, I think in 2018. Me and Mark Yusko went in and said, hey, we got this fund, it's a venture capital fund, this Bitcoin thing. Would you guys consider putting this on your platform? And I'll never forget, 2 older people in the room, 2 younger people in the room. The 2 older people in the room, they might as well have been snoozing. They're like, you guys are idiots, right? One of the younger people was a guy, and he was, yo, this is gonna fly. This like he was
grabbed
like
your coattail on the way out.
He's like, hey, let me get your email. Let's talk, right? Like this thing, I'm buying, right? Like I'm into Bitcoin. And then there was a woman who was probably like mid to late 20s, if I remember correctly, and she was kind of agnostic. She was like, well, I don't think that the old guys are right, and I think this guy's a little too enthusiastic. So like she was kind of in the middle. And I think that was pretty eye-opening because that was probably where most people were, right? It was like there was this stratification of some people were really excited, a lot of people were not, and they were not interested in putting the fund on their platform, but they said, hey, we'll keep following along, whatever. Now they're offering funds. But look, it took 8 years, right? Amy, who's the head of digital assets at Morgan Stanley, went on Bloomberg, and she said it's the best launch they've ever had at Morgan Stanley. You telling me that every bank on Wall Street, every asset manager on Wall Street is not paying attention? BlackRock now just announced they're going to do an income Bitcoin fund. You telling me they ain't going to go deeper? They're not going to try to get more assets? It's game on. And so Wall Street's here. Wall Street's going to keep feeding the ducks. They're going to keep coming out with products as long as people keep investing in them. And I think it's only going to get bigger from here. And that's going to be a persistent bid for Bitcoin over time.
While retail investors debate, institutions are acting. Wall Street is now fully engaged in Bitcoin. BlackRock led the charge with one of the most successful ETF launches in history. Fidelity followed. Then came a wave of competitors: ARK Invest, Van Eck, Bitwise, and now Morgan Stanley. This isn't a coincidence. It's a competitive race, a land grab for Bitcoin exposure. Pompliano shares a personal story from 2018 when he pitched Bitcoin to Morgan Stanley. At the time, the idea was dismissed by senior executives. Fast forward to today, and the same institution is launching highly successful Bitcoin products. What changed? Demand. As more capital flows into Bitcoin ETFs, institutions are incentivized to create more products, capture fees, and deepen their involvement. This creates a powerful feedback loop. More demand, more products, more accessibility, more demand. And over time, that sustained demand can drive price appreciation.
I believe that a huge part of this is because of deflation. And there's plenty of people who disagree with me. Everyone says higher, gas prices are going to lead to inflation, yada, yada, whatever. I do not believe that the short-term impact on oil is going to be nearly as important as the 4 macro deflationary trends that are swallowing the US economy. Tariffs are deflationary, deportations are deflationary, AI is deflationary, and robotics are deflationary. And I think those 4 forces are a much, much bigger deal than the short-term spike in oil. And as we saw, we announced that, there was a ceasefire, immediately oil drops. Now there's a blockade, there's all the volatility coming back, prices going higher, all this stuff. But if we get to a culmination and an end, like an actual end to the Iran war, and the Strait opens up, oil's going to fall off a cliff. A barrel of oil is somewhere around 50 to 60 bucks if there is no funky business going on in the world. Okay, well, if it's trading at 100, that means it could drop 50%. So you say to yourself, a lot of the current price increase in oil is due to these artificial external shocks to oil. Well, that then trickles through to gas prices being higher. And if all of a sudden you remove those external shocks, sure, is it going to come right back down on a single day? Probably not. But we saw it drop down to 80 bucks a barrel as soon as we announced the ceasefire. Well, what if we actually announce a peace deal and it becomes known in the market we are no longer bombing Iran? I think that you're going to see oil come down. I think you're going to see stocks rip higher. Stocks are back already green on the year. So, imagine being a panicking. That's just like a loser life, right? Just think about how crazy that is. Every time you get a sniff that there could be some sort of bad situation coming, you immediately panic. That's what a panicking is, for those that don't know. You just panic all the time.
Emotional investor.
Yeah, not even emotional. You don't have brain cells, right? Tariffs are coming. Oh my God, the world's going to end. The shelves are going to be empty. Inflation's going to be high. The Great Depression. Remember how crazy everyone was? Do you remember what I was saying in April of last year? We would be back to an all-time high stock price by the end of the year. We were back by like August. Why? Because all noise. It is all noise. It is an overreaction from the mainstream media and from investors who have an academic view of the world. Okay, guess what I've been saying this entire time? Short-term oil prices and gas prices are all noise. How do I know that? Well, we just got the PPI today. The expectation across Wall Street for PPI, headline PPI, was 4.6%. That's a massive jump. It was 4%. How do you miss that bad and keep your job? How's that possible? Imagine if I, on a daily basis, was so wrong that I basically ran around and told everyone, the world's ending, the world's ending, the world's ending. And then we find out, no, it's only 4%.
It'll be revised later on too.
By the way, the 4% is higher than it was before. So it's not that like the direction of travel was wrong. It's not like they said it was going up and it went down, right? So I'm not claiming that, there's no impact. What I'm saying though is consensus was 4.6%. It came in at 4. Well, why is that? Do you remember 2 weeks ago on April 2nd when I told everyone that Trueflation was telling us that higher gas prices in America were not going to lead to higher inflation at the level that everyone was expecting? If you go back, Trueflation, for those that forget, on the second day of April, or first and second day of April, they basically get updated at the start of each month with a bunch of these data sets. So they go and they revise Trueflation. It changes on a day-to-day basis because of the data points, but there's a lot of people who report once a month. Trueflation had gone from 0.8% CPI number up to 1.7%, more than doubled since the Iran war. That's a big deal, right? So no one is claiming that inflation was not going higher. Trueflation was saying it, people were saying it, all that. But on April 2nd, when I looked at Trueflation, it went from 1.7 down to 1.2%. Huge revision down, like abnormal revision down. Why? Well, if you go and you look into the data, there was 4 major sectors that had negative growth on a month-over-month basis. Food, utilities, transport, and housing. All 4 sectors, 4 huge inputs into inflation measurement, were negative. Not like growing slower, they were negative. So when you look at that, you say to yourself, hold on. Gas is up, of course. But is gas more important than food, utilities, transport, And housing? No. And so that's how I knew, is because actually the true-flation number revised down 2 weeks ago. And so I continue to tell people, true-flation is the most accurate measurement of inflation in the United States. It has a 98% correlation to CPI, not PPI, but CPI. It's just that CPI has a 1 month lag. So if you look at what true-flation tells you, a month later, that's what CPI is going to tell you. This is easy. This is like, I'm not a smart person. I'm just merely looking at the data and saying, okay, well, if this one tells me it's not going to be that bad, then this one's going to tell me that a month later. Why don't I just look at the one that is fresh, the one that's real time? So to me, that's the whole story here, is everyone, they're constantly promising us, oh my God, inflation's coming, inflation's coming. Everyone's brain broke during COVID because everyone thought inflation's always going to come back. Like, no, actually the lesson from COVID is how insane that situation was. We literally are bombing Iran. We put a blockade on the Strait of Hormuz. Oil has gone up over $100 a barrel. Gas is $4 in America, and we don't have high inflation. So the fact that we had over 9% inflation, according to the CPI, tells you everything you need to know about how insane an outlier event that was. But outlier events are outliers. They don't constantly repeat themselves over and over and over again. And so from that perspective, I think that there's this, kind of like mental psychosis that is happening in finance, where it's almost like people want there to be bad things going on. And maybe some of it's like the Trump derangement syndrome stuff, but I think there was plenty of these people around when Biden was president, right? So I don't actually think it's like as political maybe as people want it to be. I just think there's a bunch of people who they have equal access to a megaphone now. You can get on social media, you can say whatever you want. And guess what? Pessimists, they're able to attract an audience because they sound smart. But show us your returns. How many times you've been right? Right? If you were predicting the next great recession, you sold your stocks on February 28th or on March 1st, and you were waiting for the 25% drop in the stock market that you claimed was coming. When did you buy back in? When did you wave the white flag? When did you give up? Cry uncle. Because you definitely didn't get a 25% drop in the stock market. And so it just goes back to, I could make the argument that the stock market is having one of its best years ever so far. Why? The intra-year drawdown average across years, the intra-year drawdown is 14%. We didn't get 14% down in the S&P. So we're doing better than average year so far.
Year's not over.
Year's not over, of course. I mean, look, could we get another huge drawdown? Sure. But like, I don't know, whatever the S&P ended up going down 9, 10%, didn't go down 14, and we're back to positive. So if I told you the start of the year, all right, here's the deal. Ready? We're going to get the Panama Canal stuff going. We're going to go put a bag over Maduro's head. We're going to use the discombobulator. Then Trump's going to really get on one. I think he's got the hot hand. He's going to go start bombing Iran. We're going to have them firing off drones and rockets and missiles and stuff all over the Middle East, hitting random countries and civilians and energy depots and all this stuff. Then we're going to announce a ceasefire, and then we're going to go to negotiations and not get the ceasefire. Oh, by the way, Russia-Ukraine's still happening. By the way, China is over there trying to figure out what they're going to do because they're actually under a lot of pain right now. That's why they want Iran to settle this so they can start getting oil again. Oh, did you know that the United States has gone and bombed Ecuador? Ooh, let's have that conversation. We literally are doing so many things in the Western Hemisphere that most people don't even know that stuff is true. In Ecuador, over the last, 8 weeks, we have bombed narco-terrorist organizations. A lot of people don't know that we dropped a bomb there, right? Or a missile or a strike, whatever you want to call it. So if I told you all that was going on, and I told you the S&P was positive, would you have believed me? Probably not. If I told you that Bitcoin was one of the best performing assets during the conflict with Iran, most people probably wouldn't have believed that, right? So it just goes back to, listen, think long term. It's all noise. The best performing people just have a thesis that is going to last decades. They stay disciplined. You can be intellectually stimulated by the public conversation, but just...
At its core, Pompliano's message is simple. Ignore the noise. Short-term volatility, media narratives, and geopolitical drama can distract from the bigger picture. But the most successful investors focus on long-term trends, expanding global liquidity, increasing institutional adoption of Bitcoin, the growing importance of digital, Decentralized assets. The fundamental scarcity of Bitcoin. In a world of abundance, where money can be printed endlessly, scarcity becomes incredibly valuable, and Bitcoin, with its